Your exciting new income stream could be a financial black hole. Side hustle taxes are often an unwelcome surprise for many first time entrepreneurs. The government wants its share, and this can be a much bigger slice than anticipated. Most people think about income tax, but self employment tax is a huge hidden cost. This tax covers Social Security and Medicare contributions. It totals 15.3% of your net earnings from self employment. That is 12.4% for Social Security and 2.9% for Medicare. This tax applies if your net earnings are $400 or more. Many new side hustlers don't realize this until tax season arrives. They see their bank account balance drop significantly. Imagine earning $10,000 from your online store. $1,530 of that goes straight to self employment tax. This is before federal or state income taxes are even considered. That is a shocking amount for some. It truly catches people off guard. Federal income tax adds another layer of complexity. Your side hustle income combines with any W 2 income you have. This can push you into a higher tax bracket. For example, earning an extra $5,000 could move you from a 12% bracket to a 22% bracket. This means a larger portion of all your income is taxed at a higher rate. State income taxes vary widely. Some states, like Florida and Texas, have no state income tax. Others, like California, have high progressive rates that can reach over 13%. So, a freelancer in California might pay 15.3% for self employment tax, plus 22% federal income tax, plus 13.3% state income tax. That is over 50% of their side hustle income potentially gone. This is a tough reality. A significant portion just disappears. The IRS expects you to pay taxes as you earn income. This means quarterly estimated tax payments. If you expect to owe at least $1,000 in tax for the year you must pay estimated taxes, these payments are due on April 15th, June 15th, September 15th, and January 15th of the next year. Missing these deadlines or underpaying can result in penalties. These penalties can add up quickly. They are calculated based on the underpayment amount and the number of days it was unpaid. Many people forget about these quarterly payments. They get a huge tax bill at the end of the year, plus penalties. This is a common pitfall for gig workers and freelancers. A fine for late payment can be substantial. For example, a penalty could be 3% of the unpaid amount for each month, or part of the month the tax remains unpaid up to a maximum of 25%. This is a lot of extra money to pay. Imagine an additional $1,000 in penalties on top of a late payment. That truly hurts. Keeping accurate records is absolutely vital. Every single expense related to your side hustle can be a deduction. This reduces your taxable net income. Think about home office deductions. If you use a room exclusively for business, you can deduct a portion of your rent or mortgage interest, utilities, and even depreciation. Vehicle mileage for business trips is another big one, 65.5 cents per mile for 2023. Software subscriptions, professional development courses, advertising costs, website hosting fees, even a new laptop used for business. All these reduce your tax burden, but you must track them meticulously. Without receipts or a detailed log, the IRS will disallow them. This means paying more tax. It could be hundreds or even thousands more. Get organized. Many online platforms send a Form 10999EC for non employee compensation if you earn $600 or more. Uber drivers, Lyft drivers, Etsy sellers, Upwork freelancers all receive these. This form tells the IRS exactly how much you earned. So you cannot simply ignore it. You report this income on Schedule C, profit or loss from business. Then you calculate your self employment tax on Schedule SE. These forms are complex for many. An accountant can be a worthwhile expense to ensure accuracy and maximize deductions. Their fees are also a deductible business expense. That helps a little. They can find legitimate savings. Understanding gross income versus net profit is crucial. Gross income is all the money you take in. Net profit is what is left after all your allowable business expenses. Self-employment tax and income tax are calculated on your net profit. This is why maximizing deductions is so important. A $20,000 gross income side hustle with $5,000 in expenses means you are only taxed on $15,000. Without those deductions, you would be taxed on $20,000. That difference can save you thousands. This is a key financial strategy. It impacts your final take-home pay directly. The number of Americans with a side hustle is growing rapidly. Estimates suggest over 50 million Americans engage in some form of gig work or freelancing. This number represents roughly 1/3 of the US workforce. The average side hustler earns around $1,200 per month. That is $14,400 per year at 15.3% self employment tax alone. That is over $2,200 in taxes. Add federal and state income tax, and a significant portion of that $1,200 per month vanishes before you even see it. This makes financial planning critical. You must budget for these costs. Different business structures have different tax implications. A sole proprietorship is the simplest. You report everything on your personal tax return, Schedule C. An LLC, limited liability company, offers legal protection but is often taxed as a sole proprietorship or partnership unless you elect corporate status. This choice impacts paperwork and compliance, but typically not the self employment tax rate for pass through entities. Corporations have different rules and are less common for small side hustles. Most side hustlers start as sole proprietors. They do not realize the full tax impact at first. This is a common early mistake. The tax implications of receiving payments through third party payment networks like PayPal, Venmo, or Cash App have changed. Previously, a Form 1099K was only issued if you had over 200 transactions and $20,000 in payments. For 2023 and beyond, this threshold was supposed to drop to $600 with no transaction minimum. However, the IRS has delayed this until 2025. For now, the old $20,000 and 200 transactions rule remains for third party payment apps. This means many smaller side hustlers might not receive a 1099K. But they still must report all income regardless of whether they get a form. This is a common point of confusion. Many think no form means no tax. This is incorrect. This mistake can lead to audits. Nobody wants an IRS audit. It is wise to set aside money specifically for taxes. A good rule of thumb is to put aside 25 to 35% of every payment you receive. This ensures you have the funds for quarterly estimated payments. Without this discipline, many find themselves scrambling for cash come tax time. A separate bank account for your side hustle income and expenses can simplify record keeping. This makes it easier to track what belongs to the business and what is personal. This small step can prevent huge headaches. It is a simple yet powerful strategy. Consider the long-term impact your self-employment income counts towards your Social Security earnings record. This is a positive. It increases your future Social Security benefits. However, the immediate cash flow drain can be tough. Especially when starting out, many side hustles are started out of necessity or to supplement a primary income. The unexpected tax burden can negate some of the financial benefits. This is where planning helps. It truly determines success or failure. The complexity of tax codes means mistakes are easy to make. Failing to claim legitimate deductions, incorrectly calculating self employment tax, forgetting about state and local taxes, not filing quarterly. These are all common. The IRS has audit programs and penalties for noncompliance. It is not just about paying the tax, it is about paying the right amount and on time. One common misunderstanding is confusing gross receipts with taxable income. Another is assuming that if an expense is related to the business, it is automatically deductible. There are specific rules for each type of deduction. Ignorance is no excuse to the IRS. They want their money. Understanding your tax bracket before you even start a side hustle can be helpful. If you are already in a high income tax bracket, your side hustle income will be taxed at that higher marginal rate. For a single filer in 2023, taxable income between $95,376 and $182,100 is taxed at 24%. An additional $5,000 from a side hustle would be taxed at 24% federally, plus self-employment tax, plus state tax. This illustrates the potential for a large chunk of your side hustle earnings to disappear, poof, gone. It's a sobering thought. Another subtle cost is the time spent on tax compliance, learning the rules, tracking expenses, preparing forms. This can take hours away from your actual business or personal life. Time is money. If you spend 10 hours a month on tax prep and your time is worth $50 an hour, that is $500 in hidden cost. This administrative burden is real. Many small business owners underestimate this. They just want to make extra money. This takes away from that goal. There are some tax benefits specific to side hustles. The qualified business income QBI deduction, sometimes called the Section 199A deduction, can allow eligible self-employed individuals to deduct up to 20% of their qualified business income. This is a significant deduction for many. However, there are income limitations and other rules that can make it complex. For 2023, the threshold for single filers to start phasing out this deduction is $182,100 of taxable income. Above that, the rules get more intricate. This can be a huge tax saver if you qualify. it is worth investigating. So while a side hustle offers financial flexibility and the pursuit of passion, it comes with a substantial and often underestimated tax burden. From the 15.3% self employment tax to federal and state income taxes to the need for quarterly payments and meticulous record keeping, the government's cut is considerable. It is not just about the numbers themselves, but the administrative effort and potential penalties that truly make it a hidden cost. Awareness and proactive planning are the only ways to avoid a painful surprise come tax season. Many people start a side hustle with enthusiasm only to find a significant portion of their extra income vanishes into the tax system. This can be disheartening. Over 50% of a side hustle's profit can be gone. This is a tough pill to swallow for many. This can feel like a financial trap. It is crucial to be prepared for this reality from day one. Many small business owners fail because of poor financial planning. The IRS collects billions in underpaid taxes and penalties each year from unaware taxpayers. Do not become one of those statistics. Understanding your tax obligations beforehand will save you thousands of dollars in the long run. It will also reduce stress. Financial stability requires careful planning. Every dollar earned needs careful consideration for its tax implications. Even a small profit can trigger significant tax requirements. The average taxpayer spends over 13 hours preparing taxes annually. For side hustlers, this number is often much higher. They must navigate additional forms and rules. Many find the tax system incredibly confusing. The IRS offers publications like Publication 334 Tax Guide for Small Business. This guide alone is over 100 pages long. That is a lot of reading. It details income expenses and record keeping rules. A single error on Schedule C could lead to an audit notice. This is a very real possibility. Around 1 in 250 individual tax returns were audited in 2022. For small businesses, the rate can be higher, especially if there are large unreimbursed expenses compared to income. Keeping good records is your best defense. Without them, the IRS assumes your income is higher and your deductions are lower. This leads to bigger tax bills. Remember, every single transaction counts, every payment received, every dollar spent on business supplies. Each piece of paper could save you money. A proper bookkeeping system is not optional, it is essential. Many online accounting software options exist. QuickBooks, Self-Employed, or FreshBooks can simplify tracking. These tools can categorize transactions, automatically saving precious time. They can also generate reports needed for tax forms. Investing in such software is a deductible business expense. This brings the cost down. Think about your effective tax rate. This includes federal, state, and self-employment taxes. If you earn $20,000 in net profit and pay $7,000 in various taxes, your effective tax rate is 35%. That is a big chunk. Planning for this rate prevents end-of-year shock. Consider hiring a tax professional early in your side hustle journey, not just at tax time. They can advise on proper setup and deductions throughout the year. This proactive approach saves money and reduces stress. It is an investment in your financial future. The cost of not knowing the tax rules far outweighs the cost of professional advice. A good tax advisor pays for themselves often several times over. They know about deductions you might miss. They understand complex tax laws like the QBI deduction. They can help you structure your business in a tax efficient way. This could mean choosing to be an S corporation election for your LLC in certain income scenarios. Such elections can save on self-employment tax. But this is for higher income side hustles. For many, an LLC taxed as a sole proprietorship is sufficient. The key is understanding your specific situation. No two side hustles are exactly alike. Tax laws are constantly changing. Staying informed is a continuous challenge. The Tax Cuts and Jobs Act of 2017 brought significant changes. Future legislation will too. It is a dynamic landscape. Do not assume what was true last year is true this year. Always double check with reliable sources or a professional. The IRS website is a good starting point, but it is dense. Many choose a tax preparer for peace of mind. They submit millions of returns each year. This is a vital service for many. The average cost for a professional to prepare a Schedule C can range from $300 to $500. This is a deductible business expense. It often leads to more savings than its cost. A professional will help you navigate this intricate financial maze. Do not underestimate the tax beast. It is always hungry for your hard-earned side hustle dollars. Prepare yourself, always.